there's always risks across the board. Some you can see, some you can't. But in this day and age where the U.S. is somewhat engaging in a little bit more of like protectionist, isolationist policies, that creates a power vacuum for other economic players to make deals amongst themselves, to settle trade in other denominated currencies. And then you have this advent of digital currencies, whether it be stable coins or kind of sovereign coins. And then, obviously the stuff that people are tired of hearing about, like Bitcoin and Ethereum and Solana and Ripple and so on and so forth. So the world has an appetite for other answers to dollar-denominated trade. And it doesn't necessarily mean that the end of the U.S. empire is upon us. Yeah. It just means that the U.S. can't be lazy with respect to how it treats other trading partners, other economies, how it stewards and fosters itself from a debt perspective, a deficit perspective. Because if you are having your credit rating downgraded, if you are casting doubt in terms of your willingness and or ability to repay your treasury debt, or you're regularly engaging in hostile behavior towards trading partners, like you're almost giving them no choice but to seek out other options and other alternatives. And that's not just from a how do we settle trade, it's how do we store our reserves. Are we keeping them in our local currency? Are we putting them in US dollars? Are we putting them in gold? Are we putting them in crypto? And I don't think we're to the point of anxiety and hysteria and panic by any means, but the U.S. has to be mindful about like what actions it takes with the rest of the globe, because if we just box everyone else out, we're left out of a lot of meetings, a lot of trade deals, a lot of kind of discourse across the globe. And if the rest of the world's playing catch up, that might actually hurt us in terms of our position at the table. So a lot to be learned there.